Hello, everybody, and welcome to today's episode. Is it Monday? It is Monday. Welcome to Monday's episode of Trade the Chain. It is March 22nd, and it is what I would like to call the beginning of Bear Week. You've all seen Shark Week. This is Bear Week. That's right. Because the conversations I've been having with CJ are not good. And so we're going to discuss it today on the show. And I don't know what side Ryan's going to take. The part in his haircut doesn't look even, so he might. But I will say that it does look like in our pre-episode hearings that Mr. Short Monty may be the good cop on this, but we're going to find out soon. We're going to discuss the pi cycle theory in this episode and why CJ may think things are coming to an head now. But here we go. I'm joined by the best hair in crypto, regardless of the part, Mr. Ryan Gorman, and CJ and Monty, crypto analyst from marketrebellion.com. And that is absolutely hilarious.
Wow.
Ryan, take it away, sir.
Yes, sir. This is just a reminder that all content provided by Trade the Chain is strictly for educational and informational purposes only. None of this is investment advice. You should not be listening to us, especially with my crooked haircut today. Monty with that tight fade making me jealous.
Yeah, Monty's looking sharp today.
Yeah, buddy. Trade the Chain is brought to you by TradeTheChain.com, a global 24/7 community of traders of all ages and all abilities and all skill levels, all using AI-driven sentiment indicators and actionable alerts to help them beat the market. If you want to trade like a crypto insider, check out TradeTheChain.com, and if you're not already a member, you get a 14-day trial.
Bang.
Boom.
Pretty neutral on the dash here, still very long-term bullish, but we'll explore that and more. But first, over to marketrebellion.com/crypto. This is Monty and myself at our community at Market Rebellion. Get access to exclusive trade ideas, our macro portfolio allocations, a pro charting platform, a trading education curriculum, and an elite community of traders all throughout the world, and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. You can start your first month trial for just $1 at marketrebellion.com/crypto. So Alex, as he said formerly, this is Bear Week. Not, saying we're bearish per se, but we do have the pi cycle top indicator coming very close to a potential top. So we want to pick that one apart and kind of dissect that actual indicator to see, is it legit? Can it be relied upon in historic instances? Is this time different? We're going to answer all of that and more. But any thoughts?
Well, I just want to say, we're not here to shill Bitcoin, pump Bitcoin, change the market. We're just making it real. So, I mean, if your ears can't handle what we're going to talk about today, if they can't handle negativity thrown into that positive bull run mix, then you probably should tune out now.
Alex knows his audience. That's what I'm saying. Know your audience. Know your audience. Alex knows his audience.
The thing that was funny is that I did post this chart on Twitter, and it did get a lot of feedback, negative feedback. I was actually sitting in the car with one of my friends who's like a bull, and he looks at me and says, "Why are you tweeting this bearish stuff, man?
Oh, yeah.
What are you doing, dude?"
CJ, you have no idea. The comments are going to be filled with like, "You guys suck. This was the worst episode you've ever done." I'm telling you.
This will be the first episode, I think, where I won't be the most hated person on the show. Right?
Don't push your luck. So this is the pi cycle top indicator, very popular indicator, like the stock to flow model here on one of our favorite sites, Look Into Bitcoin. And this indicator was created by Philip Swift. And what it does is has two moving averages here that are kind of derived from another one of his models that I'll show you, which is known as the golden ratio multiplier. And each time we have an intersection of these two moving averages, we typically get a top in the macro trend, as you can see here, that happened in 2013, 2014, and then again, nearly perfectly in 2017. Now, where you can see, if I zoom in on our current time, it looks as if we're coming very close to another intersection similar to those previous historic ones. So, oh my God, right? oh my God, are we going to crash? I don't think so. I think while there are probably a lot of people looking at this indicator who are probably, worried, I don't see it being a huge factor. I do see it being somewhat problematic in terms of its efficacy and accuracy. The primary reason is just because it was created in April of 2019, which means that it was never used during any of these previous active cycles to actually call the top. So that makes me question its reliability a little bit. That also implies the fact that it was back tested with cherry picked data to kind of suit these particular market cycle tops. Now, so looking at kind of where we get these numbers from in the practical application, I guess the thing that I will say before passing it off to you guys with the pi cycle top here is that people will say things like this time is different because MicroStrategy is in, because of all of these massive players are in, but that still doesn't get away from the concept that these moving averages, that's not what they're measuring. What they're measuring is how fast price gets overextended in a very short period of time, and then when it's most likely to correct. So yes, it doesn't account for the whales in the market. It just accounts for how we have previously behaved when price has been affected by certain percentage bases. The second thing that I will say, and this is just one model of many different macro models on look into Bitcoin. But if we look at this one, and we talked about this earlier in the Daily Crypto Bite, and Ryan did mention this last Friday briefly, but we had a very large drop off in the amount of Bitcoin whale wallets with over 1,000 coins. A steeper drop off than we've ever seen previously. Now, granted, we have more whales in the market than we ever have historically, but still, it's very notable to see that these individuals are taking quite a bit of profit just as we get closer to this intersection in the pi cycle top indicator. Despite a lot of the flaws that I kind of just highlighted and pointed out, is this something we should be looking at debunking or considering?
Well, let me just throw in one more thing into the mix because I want to hear everybody's thoughts on this. We have expiries coming up. I want to know with options and open interest, what if you throw that into the mix, does that make this more of a believable possibility or not? But I guess there's also a lot of variables in that.
Well, how have we seen that? How have we seen price perform historically when it comes to those expiries?
It hasn't it has made it sideways for a short time after when there's been overly expressed open interest in the market, but it has not retracted on that first week of the month. Bitcoin prices, funny enough, the retractions or the heavy retractions seem to come around the halfway points of the month. But again, who knows? What do I know?
So sorry, Monty, two counterpoints to this chart, CJ. One, mining difficulty and hash rates are nearing all-time highs. When that happens, a bull run typically continues, right? And then on top of that, you have exchange reserves, they're back near record lows. That to me tells me that people aren't planning to sell, right? And they're planning to hodl, to hold on for the long term in anticipation of Bitcoin values going up. So, I mean, that to me says that perhaps the pi cycle top indicator, maybe because it's back tested rather than used in an active market cycle, as you've mentioned, I don't know that it's going to hold accurate this time. I don't know. I'm usually the contrarian here in terms of everything going to hell, basically. But I think ultimately, I think that I don't see a huge drop in Bitcoin happening anytime soon.
Ryan, what I will say about that chart and looking at it, and listen, there are details. It was created in 2019 and all this stuff, but those, the market has not done well when those lines have crossed, and
right.
that should be a point to just make.
No, that's fine. And that doesn't mean that it won't drop. Like we might not have we could have a flash crash perhaps, but also look what's happening in Turkey. Bitcoin searches in Turkey are up over 550% because the lira has dropped what, 14, 15%. So people in Turkey are stocking up on Bitcoin as well. Just because people here aren't interested in Bitcoin doesn't mean that other places around the world people aren't stacking it up. Right. And I think that perhaps demand will even out. Maybe we'll just end up trading sideways.
Well, the interesting thing, and the interesting thing about this is if we look at the cycle in 2013 and 2014, we had a top, at this intersection, we had a top, but it wasn't, this was an 80% correction. So I don't know if we can really compare it because it was just so different, but, we did have like a multi-leg bull market here from 2013 to 2014. So do you guys think that it's possible that, this is a very similar point to where we are now? We're coming up on the month of April, and what could you guys see kind of a correction, a consolidation, and then a second leg up throughout the summertime and then into the fall of next
CJ, I just want to say real quickly, if that is the case and we go through the summer, kind of just range bound and waiting for that second leg, what you just showed us from 2013 from a time perspective is kind of how we actually are predicting the market right now and where the bull cycle will end. So it'd be interesting.
Wait, get back to that chart real quick. CJ,
Yeah,
there is a cross that's on there.
Show the whole chart too, so everybody can see the whole range.
Do you see that cross between July 2013 and October 2013? You were there, yeah, right here. Keep going to the right. Right there. See how it crosses right here before it legs up? So what's that? August 9th, 2013, it crossed, and there wasn't a correction of any kind. It preceded a massive bull run.
Yeah, that is because that would be like the inverse. You know what I mean? Like this would be a bearish cross since the orange is coming upward.
Gotcha.
In this instance, the orange is coming downward, and so it would be a bearish cross. It's like the
inverse. It helps to do my homework more.
No, that's a good question though. And you're right. Like this stuff isn't perfect. This was delayed by about 30 days. So this market's top call per se was not perfect by any means. And I think the bottom line here, guys, is that none of these models are like perfect. There's something that we can find interesting and pay attention to, but overall, they have to be used in confluence with other models and indicators. And Ryan's one of your points going back, to those other indicators. Not the vast majority of them are showing this story. Most of them are saying that we're still in the sixth inning of the bull market and are likely going to continue going up to six figures. This is the only macro indicator that we've seen give bearish signals thus far in the bull market. That's why I felt we needed to address it today.
And one more thing, the elephant in the room. What if the Bitcoin ETF is approved by the SEC? Then all bets are off. Because money's going to pile into that and boom. Number go up.
I mean, I don't know if we can really gauge the likelihood on an ETF in the next, 3 to 4 months. That's something that I'm sure you and Alex probably have more expertise in. I think my prediction for a Bitcoin ETF has always been kind of passed towards 2023, 2024. But I mean, you're right. If we got that, it would be an explosive catalyst for price.
CJ, you say 2023, 2024. Why don't you tell the folks what you think's happening in 2022?
Well, yeah, I mean, I do think we'll have a 60% correction in Bitcoin inevitably once we end this bull run. I don't think that we'll just go up forever. I think that regardless of the corporations or the fundamentals behind Bitcoin, that doesn't negate the fact that markets will get way overextended in the short run and way underextended in bear markets. There is inefficiencies in this market, and that's what gives individuals like us and perhaps the viewers like you opportunities to profit in this market.
I do think that a Bitcoin ETF, just based on conversations I have with, multiple companies that have filed them, with exchange executives and with other service providers, the expectation, and that doesn't mean that this will happen, But the expectation is that a Bitcoin ETF should be hopefully be approved well before 2023. But a lot of people thought Bitwise was going to get approved, and look what happened there. So,
They refiled too, didn't they, Ryan?
no, I don't think so. I could be wrong, but I know Valkyrie, whom I work with, NYDIG, and Van Eck, plus Scaramucci, who filed, I think, on Friday, are the only 4 active ETF applications out there right now. There's only one 19B4 on file. That's with Van Eck.
I think Van Eck actually has the original one saved, and they just changed the date and keep hitting the push button. What's been interesting so far in this episode is, especially with all this bear talk, is Mr. Short has been awfully quiet, observing from the sidelines. Now, I don't know if it's the new haircut, but I would like to hear him weigh in on all this silly talk.
Yeah, no, sometimes it can be hard to get a word in edgewise with you guys, especially when you're going with a chart like that. But yeah, I think you guys hit on all the major points there. CJ, I think you hit on all like the major things I was going to touch on as kind of a counter argument to the pi cycle top. Most importantly, it's backdated, right? So you could kind of cherry pick these moving averages, like you said, to be whatever you want. And also the fact that the market is completely different now. And you kind of touched on how this doesn't really matter for this chart all that much because of the fact that they are moving averages. And I would agree to an extent, but the reality is like the market is just so much different right now. I feel like the chances of an 80% or even possibly a 60% correction are very slim just because of the presence of institutions and big whales. And you briefly brought up the other chart of the whale address that were decreasing that we talked about earlier today. And I think a lot of the FUD in the market right now, because you're not alone in referencing these kind of bearish macro indicators like the pi cycle top. I've seen other people kind of feeling a little bit bearish and scared on Twitter. So I think when you have a combination of these whale wallets dipping and then a macro indicator like the pi cycle top kind of indicating that we are nearing a top, you kind of get this FUD in the market. But I think if you look at them each individually, they can kind of be explained away on their own. And I think the reason for the whale wallets decreasing over time, and the reason why I'm still bullish on Bitcoin, and I haven't taken any profit despite the incoming pi cycle top, is the fact that I think a lot of we look at the whale wallets as two things, right? Either as the smart money in the market or as people that are just diamond hands hodlers. So I think if we're looking at it as smart money, it's natural that we see some of the money come out of Bitcoin, some of these whale wallets decrease when we have such a steep run up to 61.8K, especially when you consider that this was preceding the influx of stimulus money. And I think a lot of that smart money just moved out of Bitcoin to assets they think had better chance of trading less sideways than we've seen Bitcoin trade in the last 2 weeks. So I think the smart money just made the right play of getting out of significantly large Bitcoin holdings and kind of diversifying into the alts, because there is good reason to believe that altcoin mania is kind of still just beginning. And I think whenever the smart money has any chance to sort of front run an influx of retail money, they're going to take that opportunity. So I think that's what can account for the decrease in whale wallets. And then as for the pi cycle top, yeah, I think it is useful in the sense that if we don't learn from these historical instances of the market becoming extremely overbought quickly, we're probably doomed to repeat it. But like you guys mentioned, the things are just so different now. There are not only the psychology of the market, but some of those metrics you mentioned, Ryan, like the supply on spot exchanges. And the market is just so different, and there's just completely different players involved. So as much as I love looking to Bitcoin and their historical models, I don't think we're near the top yet. I think we still have a long way to run. I don't think we're going to hit a top until close to 100K. So still a ways to go. And yeah, I think this is just kind of a backdated cherry pick data, like CJ said.
Yep.
Watch it just be like the kiss of death, like $10,000 correction in a day. No, I'm just kidding. We'll see what happens though. I'm in agreement with you though as well, Monty. So.
All right, well, this is turning out a little more positive than I originally thought it would. This is good. I'm glad you guys are communicating and you know, coming back together, and things don't sound so dismal.
I didn't mean this to be like a bearish, like scare everybody into selling their crypto. I just thought we needed to address it because it's a very popular model. Like Monty said, there's a lot of analysts and individuals who've talked about it. Philip Swift, you know, the creator of that indicator, has come up with some cool stuff. So I think we do have a right to just
Yeah, for sure.
Oh, no, it's absolutely worth looking at and dissecting it and seeing how accurate it's been in the past as a way to, you know, kind of shine a light into the future perhaps and see what might lie ahead of us. But it's still such a young asset class. It's still so like illiquid in comparison to traditional assets, even though Bitcoin is liquid. It's not really that liquid. It's a very small cap asset. So it's definitely helpful to look at these different models and see how things play out over time.
And CJ, I think maybe we can even use your Twitter as sort of an indicator as well, because I saw some of the replies to your tweet. And one of my favorite ones was some guy just replied with the meme of Jim Carrey covering his ears saying, la, 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 he's not listening. And I think that's actually, he was joking, but I think that's actually kind of a good glimpse into the mindset of Bitcoin traders. Like, they don't let the FUD get to them. They don't let a single indicator change their bullish outlook. So yeah, if the traders aren't looking at this indicator and believing it, then it really has no weight.
What's funny though that I've noticed about this asset class compared to being in the traditional assets, and I'm sure Alex can relate to this, right? When you talk about the markets going down, like equities markets or commodities or FX markets, it's just like, yeah, of course they're going to go down. They can't always go up. Then you have the gall to mention that a crypto asset will go down, and everyone just piles in like, know your audience, shut up, go away. Who is this guy? I don't trust someone that has black nail polish. Like all these things, they just find whatever they can to discredit you. And it's like, yo, number can't always just go up, right? I mean, look at StormX. We now have a massive value buying opportunity. StormX is a massive value buying opportunity. It had to go down after going up as high as it did. And it's gone down, what, like 25, 30% since the weekend high?
First of all, we CJ called it on the show. He called on the show last Friday. He said, listen, once it gets somewhere in that 6 to 9 cent range, it's going to trigger a 30% or more pullback. What did it do? It hit 80. It hit 8 cents on Saturday. It did trigger that pullback. You know, we've kind of been range bound right now, but I think it's a perfect time. I'm DCAing in.
Yeah.
And the same with VGX. So
Alex, the fancy acronym for all of you who don't know what DCAing is, it's dollar cost averaging.
But with VGX, I mean, there's a lot of people like going, oh, everybody's arbing selling VGX to get LGO and this and that, and there's no news hap. Guys, we got less than 6 weeks till the biggest like deal of the year with Voyager happens, and that's the token swap. So hang on to your damn handlebars, folks.
I mean, we'll see.
Talking about an asset potentially pulling back isn't meant to like scare people. It's just being realistic. And people who see these opportunities as being able to buy at a discount, like I did, I didn't sell all my StormX with these paper hands. So I think, you know, there are a lot of people who clearly did, but I'm using this as a buying opportunity and I'm stocking up on more.
Well, Rob over at Digital Asset News sent me a message earlier today and said, you might want to remind Ryan to bring some plastic bags with him to Puerto Rico because the water might melt away his paper hands. You know, but there's, I also think that, you know, pullback, retracement of certain tickers can also be healthy. You know, it depends obviously on the company, but I think it'd be healthy. It builds it stronger. One of the things that I would like to cover that's groundbreaking. I'm setting tomorrow's agenda today.
Wow.
I would actually like to go over what happened with Cardano and Coinbase listing. And I mean, the answer is nothing happened. It was surprising. I mean, I have to be honest with you. I was like, wow, Coinbase listing of ADA is going to be the end all like moment of the year. That thing's going to soar to crazy limits, but nothing happened. I want to go over it tomorrow. I want to do the technicals. I want to do the Coinbase effect and see if we can maybe get to the bottom of it.
Cool.
Anybody else have anything to say that's positive or negative?
Puerto Rico later this week. Yes.
Just in terms, the last thing I'll say about the Twitter discussion and the Pi cycle top we were talking about, when you put out even something a little bit bearish like that, and like I said, I'm not inherently bearish or anything, but you get a feel for the sentiment, the overwhelmingly.
And
he's gone.
So,
he's gone.
so overwhelmingly bullish, we lost him there for a second. But I think that's where
only. Your internet broke out, CJ. Could you finish the last like 5 words of that statement?
Can you hear me now? Okay.
Yes, we can.
Okay. Yeah, I forgot.
Well, that's
the big boards.
It's the viewer's loss. All right, guys, this has been awesome. It is, you guys are absolutely correct. It's something we do have to bring up, whether we believe in it fully or don't, because it is out there and a lot of people do talk about it, and some may even follow it down the path no matter where it leads. Tomorrow, join us. We're going to look at ADA, Cardano, why the Coinbase effect did not take place. And we'll hit the big boards and get into some more TA for you guys. So hang on to your handlebars. Happy trading, and thank you very much for joining us today.
Thanks, everyone.